So thanks everybody. I'm going to rip through some really key concepts. I'm going to go just probably to about 1:30 today. Be a quick one, and then follow up next week. Like I said, we're going to get into this probably on a weekly basis as a part of the basic membership, and so that's a good segue into what I want to discuss. So let's first start really at the top here. Go to everyone if you're new to Harmonic Patterns or you're not registered as a Harmonic Trader Basic member, simply go to harmonictrader.com, register, hit the register now button, fill out email address and name. That's it. You'll get a basic membership. You'll generate access into our basic membership page. Click there. And this is what I want everyone to do today, and maybe a little weekend reading, is to certainly access all the downloads. So if you go to the basic membership page, all of my books that define harmonic patterns are available free as PDFs. If you want to purchase the physical books, they're available as well. But what I want to talk about today is what's in and outlined specifically in the volume 3 that I released back in 2016. So if you click on that, open up the PDF, you will you'll see it's a red cover. Looks like that. That's what you want. And I've got the official, I think there's a legal copy circulating on the internet, but you can get the official copy for free. And I've even seen where people are baiting people with this download of this book as a free download, and it's some kind of virus or Trojan horse. I mean, it's a really shame. So just get the download from me directly, and then what I want to talk about today can be referenced specifically on page 265. Let's get there, and I'll talk about the bullish setup. We're in some really strong trends with the crypto, and of course you want to be favoring the bullish side in what we have been seeing, and continue. We see this continuation over the next few weeks. This is going to probably last throughout the summer. So I want to highlight a couple of harmonic technique strategies that give us really what we can look for to highlight unique situations within a lot of the noise that are really specific. And for me, for what I look for, this is all built into Harmonic Pattern Collection, and that's what I want to talk about today. So get the book, get the download of the book, volume 3, go through all of that. But this special technique really involves relative strength. And the book in volume 3 talks a lot about the RSI BAM and differentiating the complex structure. This M formation, that's the complex structure. Now, what we see most of the time is that usually is just a reaction. And we'll go to some crypto examples in a second, but what we're seeing is a strong move up, and then you'll get a nice M formation in the overbought. That sets up your whole RSI BAM, where this correction to the downside actually and eventually will be resolved with a corresponding retest. And that's what we want to look for. That's what we want to catch. Usually we want to look as soon as it starts hitting the 50 line. It's best, and I will show you how we use the amplified RSI, which is really hypersensitive variation of relative strength. To key in on these situations, but we want to look for some kind of corrective pattern with this formation preceding it, and then we see really nice moves that are at least a retest or even more. That's highlighted on stuff like this. I mean, this is the example from the book. Here we go. So this is just the really kind of the simple variation of it, where we're looking for a bearish signal actually to precede it, an M formation. Then you have a full retest down to the other side, oversold. See a clear downtrend, and then this sets up the corresponding retest, and that's where we see at least the reaction mechanism of RSI BAM, and especially with some patterns down there, we get a nice lift off. Let's look at one or two examples. Here's Bitcoin. And actually, let's jump over to Ethereum really quickly, because we've talked about this complex structure on the weekly chart or the daily chart. I think it was the daily. It was this, actually it was the daily chart. And I started to get into this last week, especially with HSI. And I will talk a little bit about that, but this is a really easy technique. I'm not saying you can do this with any relative strength. I'm a big fan of relative strength. I've done harmonic strength index and amplified RSI as variations of relative strength, but if you just want to use relative strength, that's fine. You're not going to have as many opportunities as, say, amplified RSI, but you look for the same M and W formations. And so how we do it with the software is you can see this M formation. This is Bitcoin. Yeah, that's Bitcoin. On the initial test up into February, I talked a little bit about this last week where we drew the M formation that formed on that extreme reading. And I said that is, that's certainly overbought, but that M formation is kind of a sign of strength. It takes more time, and what happens is we get the corresponding retest. So you come down, usually the 50 level. This is amplified RSI, so sometimes it's even better to get to the 30 level. But once that sets up, not only in RSI, but price, we know that this formation gets retested in most instances. That's how we treat it. That's what we look for. Sometimes it's a delayed reaction. Other times it's really clean, like what happened here in Bitcoin. And we come back for the corresponding retest. That's just kind of the built-in mechanism of how this M formation is to be treated. We'll look at a bearish example in a second, but that really spells out what we want to see when we have that M formation. The final part of it is on the bottom indicator is harmonic strength index. And harmonic strength index is our proprietary indicator that's denoted by the arrow right here. And so when we have that complex structure, I call it a complex return trade because you have the complex structure, it sells off, it has to return. That's usually triggered by harmonic strength index. And it's a great confirming factor to have the two together. I think on the 4-hour chart, we just had that, it was even clearer. Yeah, here's the 4-hour chart. I mean, actually, you had it twice on the 4-hour. You had it on this other time frame, the smaller time frame with same thing with the daily, but you can see it more clearly on the 4-hour. And then you had it again on that last correction. So this is, not to complicate it, but when you see an M formation and it sells off down to the oversold, we look for some kind of corresponding return. In this case, look, you would start looking for it there. It didn't materialize all the way back, but you see the reactive capabilities. Then on a secondary test here, okay, that's that return trade sets up again with HSI, but this is happening over and over again. We don't have it right now. Look, on the 4-hour time frame, there's no complex structure. So take a look at that. Now let me show Ethereum and one or two ones. I mean, Ethereum's at 2050. That's darn impressive. And the big thing that happened with Ethereum I was concerned about Ethereum for this one reason. The weekly time frame on this, here you go. Weekly time frame, we have a big M formation. And this is a big update for me too. I'm going to call it as it is before Ethereum really gets away from me. This is doing something probably stronger than I even anticipated, where we do have the M formation. Beautiful. There and there and there. Even like a pattern. You know, I mentioned that could be like a little bat pattern in the indicator itself. And so why would that not be at least a reaction in the indicator, which is happening at a pretty strong spot, expanding back into the zone? That's actually what you want to see. I'm going to show you a historic precedent there in a second. This is weekly. But you want to see this thing continue, this complex structure, the fact that it's going back in. We know that it takes more time, but the fact that it's going back into the zone is already a sign of super strength, I'm going to say. I thought we would come down to the 50 level and then launch, but we didn't do that. And we're seeing it early. The precedent I wanted to show before. This was what I was talking about. This is what I thought would go down, where we would have some a real consolidation off of that complex structure, like we did back in, what was that, 16 or 19? But we didn't do it. And here's the precedent. Let me go back to that weekly, or no, it's on a daily. It's on a daily, where just to show this kind of return back into the zone as strong as it is. Let me go. Yeah, it's kind of like what happened here back in August. And we got a really nice continuation. Any consolidation here, it's another formation on the daily. Look at that M formation, guys. Come up, form a B point, back down, M formation. So you know that complex structure, that's what it's called, is going to have to give you a reaction back up. So how do we apply that to current situations? Let me look at one or two things, show you guys, and then I'm going to look at, if you have some things you want to talk about in the chat, I'll take a look. Yeah, the super chat and all that stuff, I'll talk about it in a second. I'm not, maybe I'll do that at some point, but I don't know. I'm doing this stuff really to kind of highlight the remarkable harmonic relationships going on, and also kind of show the framework, the larger framework that's unfolding. I mean, here with Ethereum, we also talked about both of these HSI signals on the daily. That's the harmonic strength index as continuation signals, and they've been quite strong. We are up back in the oversold zone right now. I mean, here, this is also something I'm taking a look at, but HSI is still expanding, which is strength. And look what's going on. Here's our RSI indicator. That's really strong. That has taken out some recent highs. If you take a look at it like this, on the indicator itself, we're breaking above these recent highs on the indicator. That's why we'll see this, how far this goes this weekend. But if we come up in the overbought area and we do another M formation like this and then come down, okay, that would set us up for the monster move. I would think that if this continues to expand, we will bust into 22, 23, 2400, consolidate, and then come down on another complex return where we come down, and that would put us where April would end up being, remarkably strong. It's already setting up, and we're seeing that right off the bat. I mean, I think it's already showing those kind of signs where after this long pause, Ethereum is ready to do another measured leg up to minimum target 2,500 and some longer term targets that I had put up a while ago, upwards to 3,000. We will see. Now, something I want to show everyone is we do have this crab formation taking shape. That would be a 1618 up to 2,500. Although the deep crab, that's what this is, likes to go to usually a 1902, like that, 02, about 2750. So this kind of breakout, I'm not jumping into it yet, and I want to say that I cleared out of Ethereum for a kind of swapping it out for a Cardano position, Bitcoin position. I'll look at Cardano in a second, but this is shaping up with that kind of XABCD formation to do a breakout, to do another 1618 breakout. And if we really get up into that zone, look, HSI spends the weekend and continues higher. That's going to be quite strong. And we see the early stages here of that return trade where we're breaking out. We're breaking out in the amplified RSI reading. And I'm pretty sure RSI as well. Cardano. Now, Cardano has... Kraken. Why did I click on that? Here we go. Cardano has a really big complex structure that it's been trying to resolve for since the post Coinbase run. Here you go. And I want to keep my eye on this because this type of breakout, if it's going to take more consolidation, we'll have to wait and see, but it looks like it's building. We will know probably by next week. This has to crack up. And the acceleration on Cardano did do a few fairly positive things. We need to get above the 50 line on that. And then we go to 4 hour. That's a little bit better. No, hourly. Go back to the hourly time frame. We are setting up here. This is something else I wanted to show everyone. Here on the hourly, we have a really nice crab pattern that developed last week. But if we look at the type 1 framework, there's your reaction. There's a couple of HSI signals that tell you it's over. We should be seeing, at a minimum, a return back to the hop at around 133. And if we look at our complex structure, all right, looking for that M formation. Let me come back to here. We have to take it all the way back to that prior high, but we had a major M formation at that post Coinbase high at what was that 150. So I'm looking for that to return and retest. Is it 133? Is it break out and go for a full 886 retest at 150? Something like that has to be resolved. This has been not only those complex structures, but most of the patterns that are generating on my software have been doing the 1-2, the type 1 reaction, have the type 2 return for the completion on the reversal. Here's Cardano going back, on the hourly, just back about 2 weeks after that first collapse of the Coinbase spike. You had a really nice alternate bat, and that's auto-generated. There's other patterns I could trace out here, but I only go with auto-generated patterns. And this is just another strategy and kind of reality of harmonic patterns I have to emphasize for everyone so that you know that it's so common to see the quick reaction to the target for the reaction move and then retest for the type 2 return, I call it, because that's type 1 reaction. Type 2 reversal, explosion, and we have green arrow confirmation down there on type 2. Those are your best scenarios. If we bring in situations like understanding where the complex structure is, if that has to complete and the pattern has to be retested, then you know when to focus on certain areas that are getting confirmed. I mean, clearly the $1 area, multiple retests, but with this pattern, that's a very strong confirmation, structural confirmation of the whole area, of the whole level. Go to 4-hour chart. So 4-hour chart, despite the huge move, is flashing a lot of bullish signals down here at about the 110, 118 level, and just another pause in all of this whole thrust. I think we go on Cardano, just utilizing this monster weekly chart. This is what I wanted to really focus on. So here's all-time Cardano, and this is like Ethereum. This is like Bitcoin before it broke out, and so many of the major altcoins that we can look at, they've either broken out or they're at this level where they need to come back and they're challenging the whole range. So if we're looking at this, we're just analyzing Cardano at the full 886 and the retest of the prior high. That's around what, 126, 120. The 886 is at 127. And we're only seeing a pause here, folks. So if I'm looking at a major ratio breakout, the way that I would expect this is minimum 113. If it's a fake out, no, Cardano is going to still go higher. But I actually think Cardano is setting up for the larger minimum 1618, as we've seen so many times before. Then maybe we pause there and like so many of these, Ethereum, Bitcoin, bust and do a 314 up to about 440. This is, and that could happen in short order with this whole pause area right here, just taking its time. It's been that's a 10x move off the low already. So I think that, for myself, that's why I really feel like maybe on percentage level, Cardano's got more to offer. But the staying power, and let's just look at the long-term Bitcoin, Ethereum charts. Ethereum 2000, we know what happened. Big bullish bat pattern on the weekly. So are we breaking out now? Yeah. Okay. Do I want to get that wrong? No. I don't want to miss this. Maybe I whiffed a little early. I've been catching most of this. I just thought we would already be at 2,500. It looked like there was some problems. And now from a measured basis and how I would play this, yeah, I can't ignore it. So I'm going to have to come back around to Ethereum. How am I going to get back into that? Well, I'll look for a complex setup. So right now, on the hourly, I'm looking at a bat pattern here. Looks like it's trying to fail. Maybe we get a reaction back down here because it's pretty, it's already run 25% in a short period of time. I'm going to have to wait. But look for maybe a trailing HSI on an hourly basis, looks like something like this. Come back down this weekend. I would say that if we're in the midst of a blow-off move where it goes to 2,500 or 3,000 and beyond, when we see patterns like this, they should not exceed their support target. So we should never see really this trade below 1660 again. If this is going to be the move, and again, that's based on our daily, weekly recognition of what's happening on the indicator. Look, the complex structure, that's what this whole thing is about. Recognizing that that's a beast of a formation. That M formation is really powerful because it's not necessarily overbought. What it's telling you is that's a heck of a strong move that's going to need more time. And you had it last year where your first move into the overbought area gives you a beautiful M formation. You don't even get down to the 50 level. This is the amplified RSI that's on Harmonic Pattern Collection for TradingView, right? So you're not going to see the same structures in it as standard RSI. This is going to show you a lot more, but I'm trying here to highlight the fact that these major M formations are flashing more consolidation higher, and now we have decided to go back up into the zone, and that's about as strong as it can be. So the next week or two, you're still up in dramatic fashion, and again, I think this is where you get the 1618 breakout. A lot going on there. The final one, let's wrap up Bitcoin. And this stuff has been remarkably harmonic that, with these sessions, I've been focusing mostly on crypto. We see the same thing. I talked about it in NASDAQ and S&P 500. We have seen that same formations of why, and it explains why these markets continue to go higher. The indicators are reflecting remarkable strength, and until they show something different, forget it. So here's Bitcoin again, folks. I'm just really kind of amazed by this. It's tough for me. I'm not going to recommend anything, but look, you're just on an uptrend, and so everything that's happening, everything they're talking about, to stay in the space and just to know that, okay, that's a pretty strong uptrend with a long way to go. And here, let's look at the M formation, a massive M formation on Bitcoin. And so my analysis, how I interpret it and recommend for everyone to understand this M formation, is to know it's going to take a heck of a lot of more time. I mean, we need to come all the way down here to even start a final leg, if we were going to do a final leg. And so there's a whole heck of a lot of things and room to run. I mean, 59,200, I don't think it's going to be lasting under 60 much longer. We've talked about targets at 67,000, and this is no joke. No canary pattern here, folks. Maybe we do have a canary pattern, or the jump man, the Mitch jump man, but no, seriously, we need to look at the big weekly picture of where this can go. And for a lot of us Bitcoin holders, okay, just so you have measured levels to understand, I'm looking at this, showed this last week. These are the two bullish BAP patterns that got the whole thing started. I've been talking about those for I don't know how long, 2 years or more. But we are only at the 314. Okay, we're barely at the 314 at 62,000. So let's get back to 62,000. But no, our final measured level is 3618. And that's right there. 69, 68, 69,000. So again, our measured levels, even if we were still to assume that this is near an end, it would have to be higher. And what I want to see is the 67,000 level is not a final point; it's an acceleration point. And that's something that we will look at maybe next week. I'll take one or two. Sure. I'll look at a couple here. The canary pattern was really funny yesterday, and it also proves my point that there's so much harmonic pattern, misinformation, that look at the books and check out the software, because it's going to show you the real measurements and what is really harmonic. And then when you understand that reaction reversal framework, it gets clearer. Look, I'll look at Bitcoin Cash. I like Bitcoin Cash. Check out this weekly pattern we've got. This is auto-generated on Bitcoin Cash, but it's an interesting spot because had a few things here at 640, the crab pattern at 716, but here's the issue, and you're actually in a rather strong position after the big correction. You had the move down to your target ones as low as 418. That was the exact low. We're now on our way back up. Clearly, 640 to 716 minimum. What you want to see is this thing to explode up to 870. But you are now there. Okay, you are now there on Bitcoin Cash, and go to the daily on Bitcoin Cash. Check out what preceded all of this. So what we talked about today is these M formations when they're oversold, overbought. W when it's oversold. We're looking at the overbought because we want to see that be your first thrust, and then we're looking to accumulate on that correction. Because that's an M formation, and we look for that to then return. That puts us in the area where the reaction in price is more likely, and we're seeing that now. I like that. Bitcoin Cash has got room. There's room to go. Litecoin, probably the same thing. Litecoin daily. Let's go weekly. Litecoin's not nearly as far along. No complex structure there on the weekly. On the daily, yes. Actually, here you go again. So this is amplified RSI, and I like to look at the big formations. In this instance, he had one down reaction, another, that secondary test that just happened in the last couple of weeks, that gave you another nice oversold on the daily. So Litecoin, yeah, that wants to come back up again. And I still say, and I guess still say that's, you run your trend line. The only problem with these markets, I think people they just want too much from it too quickly. You can't ask for a better uptrend than that. So I really think that is, if you're looking at the longer term, the daily, the weekly, we would expect it sets up another. This is Litecoin, okay, XABCD. There's your X to A. Where's the B point? 84%. That sets up a deep crab. So another, go to the 1902. Why not? 330, 340, minimum 1618. 310 or so. There's a lot of these. I mean, just a ton. And I think if you're looking for kind of an edge, and I'm going to wrap it up on that. The one edge I can recommend is looking at standard RSI or get with my Harmonic pattern collection. And anybody that hasn't had a trial to the TradingView platform, send me an email to harmonictrader@harmonictrader and send me your username, and I'll set you up 14-day trial. And you want to be looking for these complex formations, M formations. So when the red line goes on, you're looking for that return. I'll just pop it on a 5-minute. You'll see this. Go back to Bitcoin. See what's wrap it back up on Bitcoin. 59,200 patterns. This is a 5-minute chart. Those are all automated patterns, by the way, folks. Really nice deep crab. Okay, I bet you there's a complex structure up there. Yep. Look, 5-minute, even on the 5-minute pattern, Complex structure comes down, has to return. And I think if you look for it in that sequence, you're going to see a lot of relationships, and you're also going to know that when you get that first move, if I can get this to maximize, there you go. These are just your reaction trades. And I would already be looking for this return on the 5-minute back up to 6,200 from this level. I mean, this is more of what I'll get to next week of how to look at the type 1 reactions. But with the complex structure and understanding that those are just short-term moves, it's going to be easier to capture them and then look for the opportunity to play it on the return. I think that's been really helping a lot of people out. If you have more questions on that, again, go back to the website. Go get the book. Go to page 265. It's towards the back. It's go to the entire RSI BAM section. I think it's just so important that people have to understand you have to have indicator confirmation with your harmonic patterns. You got to get your harmonic patterns right, which most people, I don't know, they can't get it right. So that's why I'm really putting the software out there, because it gets what truly a harmonic pattern is. We still need to recognize the indicator confirmation. My software will highlight that, but it's up to you to be able to respond. I mean, you have to differentiate those and understand those relationships. But it's been repeating over and over again. Remember, some of the big patterns we featured last week have all worked out quite well. I mean, the Ethereum bullish bat absolutely killed it. And now we're up on some bearish patterns here at about what, 2050? And this would be, so I'm going to leave it on this on Ethereum, because really nice couple bearish ABCDs up here. We're at the hop level. I would look for a reaction, and then let's see if we can get that for the larger move. I'm looking for this thing to do, it did the kind of the poke through, come back, and then launch. Maybe by next week. All right, folks. Really enjoyed it. That's what I have for today. Again, get with basic program. That's where it all begins. And get with your trial to harmonic pattern collection. There's MetaTrader and all the other platforms that we offer. And again, exhaust all of the free resources first, including the software. Get the MetaTrader or whatever. Or if you want to try more than one, we don't have a problem with it. And if you have any questions, send me an email, and we'll catch you guys next Friday. I'll come back next Friday. We'll do more of this, and we'll keep it going. So it's been a lot of fun. Thanks, everybody. We'll see you next week. Take care.